The global economy is in bad shape. Inflation is a worldwide issue. Many countries are affected. What's causing these financial problems? Chamath Palihapitiya has answers. Chamath Palihapitiya advises market investors to be cautious. He said this could be the world's biggest crash. How come? Here is all about what's coming is worse than a recession. Chamath Palihapitiya background. Chamath Palihapitiya is the founder and CEO of Social Capital. Born in Sri Lanka in 1976, he lives in both countries. He's known for betting on transformative ideas, technologies, and people. Social Capital promotes all stages of entrepreneurship. This strategy allows them to double down on their convictions and provide founders with runway and resources independent of traditional fund structures. Chamath was a Facebook executive before founding Social Capital. He oversaw the creation and introduction of new platforms that helped the company expand globally. Chamath held senior positions at the Mayfield Fund, AOL, and Winamp before joining Facebook. Palihapitiya was a Facebook senior executive from 2007 to 2011. After leaving Facebook, Palihapitiya founded the Social Capital Partnership and invested in Yammer and Slack. Social Capital Partnership became Social Capital in 2015. He co-hosts the technology podcast All In. Great Financial Crisis. He asserts that before discussing what is happening right now, it is crucial to look back at the final few weeks of the Great Financial Crisis. He holds this view because many people were perplexed about the actions taken by the U.S. government and a number of European governments in the wake of the Great Financial Crisis. There was therefore a chance of a serious financial contagion at the time. The U.S. government stepped in as a result, and the Federal Reserve started using its balance sheet to buy risky assets. In response to government directives, the European Central Bank did it, and Japan and several other banks did the same. The term modern monetary theory was developed by economists who are both certified and pseudoscientists. To balance things out and foster long-term growth, you can keep printing money and putting it into the economy. It appears that several governments' personnel were taken advantage of. Governments printing money and the economy. The year is 2022, 14 years after the idea was implemented. A total of $30 to $35 trillion have been printed by governments worldwide and injected into the economy. There shouldn't have been any money here. The important thing to keep in mind, in Chamath's opinion, is that over the past 6 to 8 months, we haven't necessarily been concealing real supply and demand in the market. Since 2008, we have been using the terms recession or inflation increase. It has only recently built up in the system. We have to keep in mind that all of that money has to be destroyed in some way in order to find true economic equilibrium. There must be a point where we can assess the true supply and demand. The government has made an effort to support actions that shouldn't have been supported. Over the past 15 years, all of these people's lies must have come to light. Thus, that is the scene. Imagine draining the world economy of $30 trillion. You're referring to the global GDP, which is currently estimated to be worth $85 trillion. Most likely, it will take 3 years. The planned methodical removal of money without the addition of new currency seems like we are just getting started on a long, drawn-out process. Whether or not we are in a recession is unrelated to this. Simply put, we are currently experiencing a bear market. Federal Reserve hiking interest rates. Those who thought this was the end of the story are going to be proven wrong in the next part of the narrative. Chamath told them they were wrong if they thought the Federal Reserve's decision to raise interest rates by 75 basis points would be the end of the story. According to his estimation, it will take between 24 and 36 months. This indicates that it will be another 18 months before we reach the bottom of the market. He anticipates that the market will be quite volatile. It is likely that the Consumer Price Index will remain low for the next 3 to 4 months, so he advises us to brace ourselves for the impact. Consumer Price Index and the Russia-Ukraine War. In the coming months, Consumer Price Index will be 7 to 8%. There are some out-of-control parts. We plan to include the owner's equivalent rent in the Consumer Price Index, which lags by 3 months. Chamath predicts a higher Consumer Price Index. Russia is trying to destabilize the ECB, driving oil to $105 per barrel. They're manipulating gas supplies. Germany's energy minister says this could cause a Lehman Brothers-like contagion in the energy sector. When these factors combine, coats run amok. We can't recover without real political changes. Solve Russia-Ukraine policy. Prices will rise without it. How does the Federal Reserve lose its credibility? They will overcorrect if we say we're done. They'll be pressured to act, and this means equity prices will fall. American difficulties. In the coming months, America will face many challenges. We're drunk on debt, for example. We've injected debt into private equity leverage buyouts. Sometimes, sketchy companies are bankrupt. Private equity leverages the balance sheet with debt and prices it to the legal limit. Assuming economic growth. Suppose recessionary forces or rising prices reduce earnings. The commodity market could be infected. This involves economies, inflation, asset prices, stocks, and technology. Everyone predicted the market would crash on Juneteenth. The S&P 500 and NASDAQ were up 250 and 300 points the following Tuesday. Amazingly, Facebook dropped 400 points. Every IT giant was online. Facebook. You can determine whether prices can increase or will continue to decline by observing who is the incremental buyer in the stock market. The most knowledgeable parties are institutional hedge funds, while retail buyers are the least knowledgeable. An illustration of a technology company owned by a retailer is Facebook. Facebook was a fascinating canary. The argument made by the smart money in favor of owning Facebook is that it has an extremely low price-to-earnings ratio. They argued that based on consumer demand, the price-to-earnings ratio is not low. Rather, it is simply incorrect. If they factored in all these inflation increases and their expected income levels when creating Facebook, after performing all the calculations, it appears that the transaction represented fair value at a lower price. Because of this, they sold a lot of it on the day the market was up. In this recession, all the other stocks will eventually experience an earnings revision as well. Here, Wall Street has performed appallingly in the area of retail. If you examine the average earnings projections, you will see that they have been rising all year. Economy crashing. Given that fewer people will have jobs and fewer people will buy products as a result, he thinks Wall Street is mistaken. Earnings in 2023 will undoubtedly decline as a result. The entire stock market must be recreated at a lower cost. These IT companies that burn cash while losing money will be under a lot of pressure. People acted hastily after we handed them a sizable sum of money. Everything must now be taken back. I don't think it will be as simple as people think. A rise in the M2 money supply caused the market to increase dollar for dollar. According to the correlation of 0.92, the stock market increased by 92 cents for every dollar that the Federal Reserve issued in securities. The equities market must be rewritten by at least 3 to 5 trillion if the Federal Reserve subtracts 3 to 5 trillion in value. After that, you must rewrite and redefine earnings in relation to China. A significant upgrade to the 3.0 battery design was announced by contemporary Amperex technology company. These individuals are producing batteries with a 1,000-mile range. With such technology and these errors, it will be difficult for us to compete. Okay guys, that's it. This is why buyers need to exercise caution because according to Chamath Palihapitiya, the market crash of 2022 could be the worst ever. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.